Good morning, traders, and this is your Aussie day trade setup for today. So the panic continues. Yesterday we were down 11.7%. So that's one of the biggest down days in the Aussie's history. The US markets were also down. FTSE was down 10%. The Dow Jones was down 7%. Nasdaq was, which is the one we need to worry about, which was also down. If we can just find it. Also down 6.5%. So the S&P was down 7%, and we are still falling. Okay, so Hang Seng right now is down 5.9%, but I have a feeling that this is just the headache of the US markets falling yesterday. So futures market are going to fall this morning slightly, but at the moment, most of the US futures are just hovering in that 3% down area, which is probably a lot better than what it was yesterday. 10 cents is also down 5%. And the rand dollar right now is at 16.59. So that's also stabilized a little bit, believe it or not. So, anyway, let's just get to, I want to point out something on the monthly here. So we have basically, in 2 months, wiped out 6 years of gains. So the last 6 years of gains has just been wiped out pretty much in the last month and a half. Not even a month and a half, so a month and a few days of March. If we move across the 3 hours, so for me, there's no opportunities to get into this chaos at the moment. The opportunities tend to happen at the close because that's when the US opens, and if you're not in before that, you're not going to be in on the ride. So I still think that's going to continue today. You can see the trend is very strong at the downside, but we've got this acceleration to the bottom here. And I expect we'll probably have a gap down, probably another big, massive 5% gap down, something stupid. But I just want to, there's no structure. So all the structure that we would need is basically been broken. So what you're going to have to start doing now is going all the way back into 2013 and start looking for structure there. And I wouldn't even bother on the weekly, actually. Start looking on the monthly. And so your next bits of support, minor support down there, then you've got major support all the way down here. So we've got 37,686, 36,616, and then you have 31,119, which is the next level. And to think, not too long ago, we were talking about, we had prices of 50,000, 51,000 that we were looking at. So if you think of that in 2 months, that is a 25% fall, 15,000 odd points at the moment. Okay, so plan of action for today is to, quite honestly, just sit tight and not do anything. I don't think it's worthwhile trying to jump in on this. You can see the opportunity to get in here was not very good. And then you're looking at 400 pip stop losses. And it was probably so volatile inside that 400 pips. Just go to a 3-minute chart, which will just show you what I'm talking about. There, well, that's not too bad, 200 points stop losses, but volatility is insane. Okay, so can't really give you any levels. There aren't any levels left, so we're going to have to find some structure. I would expect something around 37,600, 36,700, 36,600. That should be an area where we should find some support. Pointless even looking at Ichimoku at the moment as well. There's nothing really on offer. So we're going to have to we're going to have to wait for something to stabilize. So the Fed pumped in $500 million yesterday, and the market still fell. They're going to be pumping another $500 million in today. And so what you may find is that the bulls are sitting on the sideline, just waiting for that second injection to try and get some momentum to trigger all the short stops that are in place in the market at the moment. If that fails, who knows what's going to happen next? You probably find that the Federal Reserves are going to pump more money in, or alternatively, you're going to see stock markets limit short selling or sort of curb the market by switching it off for a couple of days. We'll have to wait and see what happens. I'm reluctant to be in the market on any of that structure. So we will sit and wait and see what happens. Anyway, hope that helps, and we'll catch up with you next week. Cheers for now.